We do not believe our quarter two performance is reflective of the strength in our platform and what this company can achieve. The actions we are taking to improve execution and the user experience are expected to strengthen Wish's operating performance. We do not expect these new initiatives to contribute meaningfully to positive year-over-year results before the second half of 2022. At this time, we will not be providing our usual quarterly revenue outlook as we are focused squarely on execution and efficient expense management. To provide some context, quarter-to-date total revenue through July 2021 was down approximately 40% compared with the prior quarter, while marketplace revenue was down approximately 55% compared to the same period. With the pullback in digital ad spending, we expect third quarter revenue to decline further. As a result, we expect third quarter adjusted EBITDA loss in the range of negative $70 million to negative $65 million. We believe that the actions we are taking to return to growth during 2022 will result in a stronger business over the long term. Hola mi gente, welcome back to the channel. This is your boy Sean from We Are Investing, a channel that is dedicated in investing and personal finance. I told you guys not to buy Wish stock. I told you that there are better places to park your money. And what happened with this stock following earnings? It absolutely tanked, despite what a lot of people on Twitter are saying that this is a great investment. But this is coming from traders and not investors, people that don't do due diligence on companies. And when earnings are reported, what matters is what the company is actually doing and the fundamentals. So as I stated at the beginning of this video, when I read the guidance from the most recent earnings report for Wish, things are not looking good. And when you hear that kind of language in a quarterly report, it is definitely not good news. That kind of language indicates that the current business model and the current business strategy is not working, and they need to rethink and they need to revamp the business. Maybe they're successful in this turnaround story, but what they're doing right now obviously is not working. If you take a look at revenues and you compare them in June 2020 to June 2021, you see that there was a decrease in revenue. But not only was there a decrease in revenue, that could be explained by in 2020 during the pandemic, so many people were shopping online, and now that we're reopened a little bit, less people are shopping online. That's not the biggest issue here. The bigger issue is the fact that revenue decreased, but the cost of revenue increased. So in 2020, you had revenue of $701 million with $208 million in cost of revenue. In 2021, revenue was $656 million, but the cost of revenue was higher at $272 million. And that's because, in my personal opinion, the company does not provide much context on this, but I think that this can be explained by Wish Logistics, Wish Parcel. The logistics side of the business is growing revenue at over 100%, but a lot of that revenue is costly because they're actually not doing much. They're subcontracting all of that work, and they need to pay for those subcontractors. So with that being said, until we see the fundamentals of this company turn around, and there are reasons that I see fundamentally to invest in this company, I would stay away. There are going to be plenty of times to trade this stock if that's what you're willing to do and trying to do. But when you trade, you need to set a stop loss, and also you need to set a price target on when you're willing to get out. And when you see language like this coming from members of Atlas, which are trying to pump up Wish, know that these are red flags and they're just lying to you. They're trying to manipulate newer investors. Take a look at this tweet. Don't depend on others to trade for you and learn to hedge yourself. All my boys, including myself, are long Wish. I doubled my Wish position by betting against earnings. No one cares if you're long or short, just don't be a dickhead. Also, the people saying, wow, I wish you mentioned this before. We talked about hedging on the podcast. The last time I did this, I got cyber bullied so. And the biggest issue is the fact that he doubled his Wish position with a hedge. And to me, that sounds like his hedge is going long and he has more leverage and money on the downsides. Otherwise, his hedge would have just kept him even or slightly negative, because that's the purpose of a hedge, to protect your investment or your bet. If your bet is wrong, you won't lose as much money, or you could potentially break even. That's a hedge. But if your hedge results in you making double the amount of money, then that is your investment or trade, and the opposite side of that trade is your hedge. So actually, Atlas in this situation was heavily short Wish, although they are trying to pump it up for you because they know that the pump already happened and they were the ones dumping it and making money on the downside. This is a game where they play retail investors. They get you to get in after they're already in, and then once you're in, they play the other side of the trade and they get you to sell at a loss while they make money. So they make money twice on one single stock. So this is a stock with horrible fundamentals right now. Maybe they're able to turn it around, and it has a bunch of pumpers who do not have the best interests of the shareholders in mind. They are just trying to make a quick buck by using you as a way to make money. Do not fall victim to these kinds of schemes and stay away from these kinds of investments if you ask me, because personally there are a ton of great companies to invest in the stock market. We talk about some of these undiscovered stocks on this channel, and also we talk about them on that private Discord, which you can join if you join the Patreon. That wraps it up for this video. I'll catch you on the flip side. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. See ya.